Hey everybody, Preston Brent here with our weekly roundup. This is for the trading weekend in March 23rd, 2018. Boy, what a week it was. We saw the markets dive this week. The Dow was down, I think, over 5.5%, 5.6%, almost 5.7. And the week prior, it was down 1.5%. This S&P was down almost 6%. And the week prior, it was down about 1.2%. NASDAQ was down the most this week. It was down about 6.5%. And they were down the week prior. Their treasuries, they're down just slightly around 2.8%. So what caused the big down move? I know all the talking heads on TV were talking about the tariffs, but keep in mind, it wasn't only the tariffs. I mean, we've got a lot of shuffling going on in the Trump administration. McMaster's out, Bolton's in. We've got the Feds that met. They were a little bit more hawkish than the markets expected for 2019 going into 2020. They did raise the rates 25 basis points this past week. We also had a budget cliffhanger this week where Trump was going to not sign it, force the government into shutdown mode. Then he came out the very minute and he did sign it. And I don't know what would have been worse because he added another 1.3, 1.4 trillion to the deficit. So there were, I mean, just pick your poison. There were a lot of reasons, and I think the markets were looking for a reason to continue to sell off. And as you can see on the screen here, I have the daily chart of the ES, which is the S&P 500 E-mini futures, and it is strictly a tenuous market at best. Is the bull market going to end? I don't believe so, but remember, everybody touts the end of a bull market the first time we get one or two hard weeks of down moves. In fact, this move this week was harder than we've seen since, I think, January of 2016. So it was pretty abrupt. Now, you can also see on this screen here that as I get my thing turned on here, we're down right now about 9.8% off the highs, which also happen to be our all-time highs. And you can see the lows that we made back here in early February. We were in official correction territory. We were down 12.14%. So it's not going to take a big drop to get us down and retest these lows. And the markets have been talking about retesting these lows for quite some time. And I think more long traders, more bullish traders would be more comfortable if we can come down and take these out, perhaps come down into this support zone just below it, around 2475, 2500, right in that area there, and then have a bounce up. And then if we can bounce up and start making a series of higher lows on a daily chart, I think you'll see more longs come into the market, and then we'll eventually take out these pivot points here. But until that happens, I think the odds favor clearly a move lower. Now, we may have a bounce next week anyway, and you may see more selling into the bounce. And the reason why I say that is we're clearly shifted the mindset of the markets, going back to the end of the first week of March. You can see here we had established a pivot point. We made these lows here, and then we had a higher low right here. So we had established a higher low. We had a high and a higher high here. So we were starting the formulation of higher highs, higher lows. But the first sign of trouble, as I pointed out to my members, is right here. We could not take out that prior pivot. Very dangerous. You could see these little long, what's called hair on the candle. We could not close up above it. So we were stuck below the 27.89.75 level. The minute we gave it up, you can see we spent about 3 days sitting on the 50 EMA. The minute that gave it up, we were off to the races. And then down we went. And then obviously our next stop-off point was the 2018 open price. And then when we took that out, the next stop-off is the 200 EMA, which is kind of where we're near right now. It's almost sitting on top of it. Not quite, but slightly. On the S&P 500, I think we're slightly above it. On the SPX, rather. So you can see right now, just slightly below an official correction territory. Here's our 2018 low from our February 5 lows about 6 weeks or so ago, 7 weeks ago. So you can see clearly the odds favor a move lower. Now, just understand the way price action works, okay? What we could do, and it'll be one of those things where it's a bull trap, is we move higher, we get back up around here, perhaps we don't get much elevation above the 2018s, and then we come right back down and test these. So now we've established here lower pivot lows, highs, lower pivot highs, which then gives us one of these kind of setups here, and that'll be in play until the markets find an equilibrium price that buyers are willing to come in and pick up much more. Okay, so then the question becomes, are we going to roll over and have a downward channel like this? What exactly is the shape of the market and how is it going to play itself out? Okay, so that's what we're watching very closely. The other thing I would tell everybody is that the minute, just as kind of a rule of thumb, when you move below the 50 EMA, generally, if you are bullish anything, I don't care what, in the markets, equity markets, unless it's a contra ETF or unless it's something like utilities or staples, which is a little bit of a hedge against discretionary and other sectors that tend to sell off more. Either way, the minute you move below the 50 EMA, take on a more of a defensive posture. You know, we go from green to yellow to red as far as moving lower. So when we're above the 50 EMA, in general, you can stay more active bullish, okay? When we're below the 50 EMA, you need to, at a minimum, move to a yellow condition, whatever that means for you. Now, if you tend to be a short player, it's going to be green for you because you're going to be just shorting like crazy. But if you're more a long player, you need to definitely be in the yellow flag condition. The minute we go below the 200 EMA and it holds on a daily chart, you're now shifted over to red, and you're either just getting out into cash or you're playing mostly to the downside. And if you follow these guidelines, it'll keep you fairly honest over the long term. You're not going to try and fight the markets. Now, I know there's many of you out there that like to do contra moves, counter moves, okay? Now, if we step it back out, let's go to a weekly chart here for just 1 second, just to give you a little bit more perspective. You can see the Trump election. We were down at 2028, okay? In the overnight lows for the Trump election, it was a lock limit move, and then boom, as soon as he was confirmed in, it's just been bullish all the way, okay? You can see the pre-Brexit vote and then the post-Brexit vote. So we went from 2119 down to 1981, but then we made that up fairly quickly. So there's a lot of agita down in this area here for us to really get this much lower. I do believe we can come down. The odds favor is coming down and testing the lows, which would give us back into correction territory around 12, maybe 13%. I could see an overshoot of that. Fairly easy, right? I could see an overshoot of it. And then it would put us kind of in an area right in here around the 2450 area, okay? Which would give us a little bit more like a 15, 16% move lower, but not a bear market. And then you'll see buyers step in, okay? I happen to be one of those that believe limited tariffs done another way are probably a good thing. But if they turn into a trade war, then everybody gets penalized, everybody will get hurt. So you can see kind of where we're sitting. You can see this weekly bar here. It was the worst week we've had going back to early 2016. Okay, now remember in 2016, January, February, we had a pullback that was a little over 14.5%. The Russell actually went into bear market territory for about a week before we bounced out of it. The S&P pulled back another total of about 14.5%. So that would suggest another 2% lower than the 25.29, which would take us down to our 24.50 area, which is another area that I see as a potential area of support. So if you're in these markets now, you need to be defensive. or you need to allocate more into cash and just sit on the sidelines. If you are long, then just be very careful. Okay, unless you're long, like I said, contra ETFs that move up when the markets move down, those kind of things. Okay, so this is the E-mini. Now, if we come back and we look at the Russell, which really had a bad day as well, the Russell on a daily chart, you can see we're below the opening price, but we're well above the 200 EMA. Okay, so it's a little bit stronger than the S&P. So the Russell is fairly strong. If we look at NASDAQ, right, which is just primarily driven by technology, NASDAQ also had one of the worst weeks, and we're well below the 50 EMA in NASDAQ, right? I mean, you can just see this, and we've had 3 back-to-back weeks in a row where tech has just been punished, but we're still in the green for the year. We've given up most of the gains, but we're still in the green. We're in a yellow flag condition in all of our indexes, NASDAQ as well. And then if we look at the Dow, I'll look at the Dow futures here. You can see that was the one that was huge interpoint swings. You can see here we're sitting, the yellow is the 200 EMA. You can see we're sitting right on it right now. We came down, kissed it, and then we bounced up just a little bit. But we're slightly above the 2018 lows. But remember, these 2018 lows were intraday. This is the lowest we've been all year that we've closed all year. Okay, you can see right here we haven't closed this low because the market's bounced back up. So we're taking damage. And the Dow obviously has suffered a pretty good deal because it's more sensitive to international. And if we do tariffs, international can get hurt pretty good. All right. So that's a little bit about where we're sitting there. And of course, if we look at the VIX, we're back into almost the red zone. I call it kind of pink before we get into red, but we're in zone 3. When you get into zone 3, again, different things happen in the option markets. Bid-ask spreads get a little bit wider. The skew gets a little bit steeper. Cost of out-of-the-money puts. You don't want to be chasing the market by trying to say, oh, now I think I'll buy calls out of the money on the VIX or deep out of the money calls on VXX. Those kind of trades are like suckers bets. What we just did this past Friday was we put on a bear put spread out of the money in VXX, looking for a VXX to come back in line again, not all the way down a big move, but close enough to where it's got a 3 or 4 point move. If we look at VXX, you can see here, right here, all I'm looking for it to do is come back in line around the, coming up here from like 49 down to around the 43, 44 area. If it falls down to this area here, we're going to have nice money in our trade. You do not want to be playing out of the money calls when VXX is up this high. Okay. So that's just another little trade that we're putting on in times like this that makes sense to me. Okay. It's a little bit of a contrarian play, but we're playing the odds. We're playing, having the markets pull back a little bit. If we look at bonds, bonds have been surprisingly quiet to slightly up. You can see this, but there's so much downward pressure on bonds right now. If I were to highlight these pivots here, you can see every time we come up and hit these pivots, we sell off. If I were to increase the size of it a little bit so that you can see it, you can see the hair on these candles on the upside. We come up, we kiss it, we pull back. We don't stay up there very long. That's around the 145.09. I do believe that if we get back up there again, shorts, or even if the markets pull back a little bit, I could see momentum carrying us a little bit lower. We could have a flush out to the downside, flush out the weaker hands, and then the market steady state and then move higher, at least for the net for this week. But this is kind of what I'm looking at on the bond market. TLT, if you can't trade bonds, pretty much the same thing. You can see here with TLT, the 120, 121 area seems to be a pretty good little resistance point, because we came up and we took out intraday this pivot point. This candle, kind of like a doji here, would suggest that the markets are more susceptible to a down move now in this, like a down move in bonds. So that's kind of what I'm looking at there. The yen, if we look at it for the year, it's up very strong. You can see here, the yen right over here started 2018 and it's done nothing but move higher. Remember, the yen tends to be where everybody goes when the global markets start to express themselves in forms of more fear and more tension. The yen is a great trade, great long trade to play. Okay, the yen dollar being a really good play when you've got that going on. If I come in here and I look at let's just take a trend line and let's plot this on here like this. Let's move it like this so we can let's get it back on here like that. So if we just kind of put a trend line on here like that, I'm not trying to make it exact, but if we break this trend line down, then I'd be more willing to say, okay, maybe short the yen and work off some of this high point here. I think the yen's getting a little bit elevated, so I would expect a little bit of a pullback in the yen, a little bit of a bounce higher in the markets next week, although Monday could see us go down a little bit more just because of momentum. But I wouldn't count on too much more near term, but I think any rally is going to be more susceptible to sellers stepping in than buyers in the buy the dip mode that we were in all of 2017. Okay. And then, of course, the US dollar is just getting weaker and weaker and weaker. We're coming back down to this area here. I had said my next forecasted low for the dollar is 86.78. And that just seems to be kind of where we're headed right now. That would then suggest the yen is going to move up just a little bit more. Same thing with the euro before we settle in to a cruising range here. So you can see here with the euro, it doesn't stay below the 50 EMA very long, and that's kind of where we're sitting here with this one. Okay, so that's a little bit about where I'm seeing in the currencies. The British pound, it's really interesting. Everybody keeps trying to say that Brexit's going to screw up Great Britain, but so far it's done just the opposite. I said with this channel here, it's going to be an ugly, choppy trade, but you want to be long the pound. And I was talking about it back here. Now, we played the pound for a couple of months, made nice money. I didn't get back in. I wasn't watching it too closely. But you can see here, anytime we get towards the middle to the bottom part of this channel, you want to be long the pound. When you get north, you don't want to be going long. So like right now in this area, I wouldn't want to go long the pound. I'd want to wait for it to pull back, but any pullback should be bought on the British pound. Okay, so that's a little bit about that. Now, gold has been strong only because of the fear of the U.S. markets imploding. More debt, more turmoil. You can see we've had big, huge daily swings in gold, mostly to the upside. We came right down to a level. I thought it would come down to about 1,300. It actually came down to around 1,308. But the 2018 open price seems to be our solid support point here. Let's see where gold goes. I think gold is setting itself up to fall back down again, and the equities to have a nice little bounce sometime this coming week. And then I'd have to look and see where we go, and is it volume on the move up, or is it basically a short squeeze? I want to see how it plays itself out. And then, of course, finally, if we look at oil, oil is, as I've been telling my members, is probably the range here has shifted a little bit. I can see us coming back up to the 66, maybe even up to 68. I think it'll run out of steam at that point if we get that high. You can see here, going back to the 15th of March, we've just been in a bulldog move up. There are plenty of things that are moving oil up. Even though U.S. oil production has increased, so is demand for oil. And the Saudis came out this last week and said they are going to support, even if they have to, production cuts all the way into 2019. So they're moving the global supply of inventory down slowly but surely. And the other thing is there's about a $2 risk premium, I think, $2.50 built into the price of oil. If Trump backs out of the Iranian deal, that's going to slow down what they can export globally. So once that happens, you'll see some of that's already built in, but we'll see oil probably WTI move up into the high 60s, probably even kiss 70. And we're talking about the same thing with Venezuela. And you can see here my longer term, believe it or not, projection for oil here coming out to in the summer months is around $72 a barrel. For WTI, which would put Brent at around 75, 76. Brent and WTI. WTI is closing some of the gap in Brent. as they get a little bit closer together. So that, we took out some trades in oil. In addition to our oil futures trade, we've added some other trades. I think oil could be really interesting as we go into the summer months. We've also got agriculture, the grains, and then we got meats and softs. Not doing anything right now. Our members, we will be doing some things. There's some opportunities setting up in there for those that like commodities or ETFs on commodities. Folks, if you're not a member of our group, I highly encourage you to come in. You can tell by our weekly updates, we're pretty spot on with where the markets are going to go and how they go and where they flow. And our option masters is a must attend for all of you out there that are just beginner or even intermediate traders. It'll be probably about 200 or 300 hours of video instruction. We're just started this thing off. We're still doing them every Thursday evening, generally. Every session's recorded, so if you miss it, you'll be able to pick it up. A lot of fun. You can come in as a member of our group as well. We got a great international membership base, so love to see you join us if so. Otherwise, members, I will see you this Sunday night for our weekly market watch. Have a great weekend, everybody, and I will see you all for a weekly roundup next week. Members, see you tomorrow night. Ciao, folks.